This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. President Donald Trump's administration is on a mission to weaken China's global network of ports and bring more strategic terminals under Western control, according to three sources familiar with the plan. The drive is part of the most ambitious effort to expand U.S. maritime influence since the 1970s and is designed to address growing fears in Washington that it would be at a disadvantage to China in the event of a conflict. Trump administration officials believe the U.S. commercial shipping fleet is ill-equipped to provide logistical support for the military in time of war, and Washington's dependence on foreign ships and ports is excessive, the People said.
Oil prices edged up on Tuesday after rising in the previous session, as market participants contemplated potential supply disruption from Russia after Ukrainian drone attacks on its refineries. Brent crude futures edged up 15 cents to $67.59 a barrel by 0354 GMT, while U.S. West Texas Intermediate crude was at $63.45, also up 15 cents. On Monday, Brent settled up 45 cents at $67.44, while WTI settled 61 cents higher at $63.30. Ukraine has intensified attacks on Russia's energy infrastructure in an attempt to impair Moscow's war capability, as talks to end their conflict have stalled.
Moving on to the top news in the energy sector.
Solar power prices in China's first provincial auction under its new renewable pricing mechanism were so low they could discourage new project investments there, analysts said. Last week's auction in Shandong province, seen as a bellwether for nationwide auctions, signals that renewables prices in the future will be lower than under the previous system, although not necessarily as low as in Shandong, where a glut of solar investment has driven prices down. Based on the results, I wouldn't be very optimistic in other provinces, unless it's in coastal provinces with strong power, demand, growth, Jefferies analyst Alan Lau said.
California lawmakers passed a bill over the weekend that would allow the construction of thousands of new oil wells annually in the Golden State in a bid to make oil supply more affordable for refineries and keep fuel prices in check for consumers. The new bill, SB 237, would award the oil-rich Kern County up to 2,000 permits each year, effective January 2026. The aim is to have California oil producers supply close to 25% of crude to the state's refinery complex and help reduce costs for retail consumers of gasoline in the state. Last year, California produced 119,000 barrels per day of oil, and its producers supplied around 23% to refineries in the state, according to the California Energy Commission. Next, we have the top news in metal markets. China's steel exports are set to hit an all-time high this year, defying predictions that unprecedented trade barriers would drive down shipments, and threaten to provoke an even fiercer protectionist backlash against the world's dominant producer. Exports will grow 4% to 9% this year to hit between 115 million and 120 million metric tons, according to forecasts from 11 analysts, all of whom had forecast earlier this year that exports would fall. Record exports from China, which produces more than half of the world's steel, underscore how its steelmakers and traders need new markets for metal that can no longer be absorbed at home, where consumption peaked in 2020 before the collapse of the property market.
Copper prices retreated on Tuesday from their multi-month highs, as profit-taking by some traders outweighed support from cemented bets of a U.S. rate cut and progress in trade talks between the United States and top consumer China. The most traded copper contract on the Shanghai Futures Exchange surrendered some earlier gains to end daytime trading up 0.06% at 80,880 yuan, $11,366.89 per metric ton. Earlier in the session, the contract hit its highest since March 28 at 81,530 yuan. Benchmark 3-month copper on the London Metal Exchange slid 0.61% to $10,124.05 a ton by 0839 GMT. The contract touched a 15-month peak at $10,192.05 on Monday.
We will now look at the top news in the agricultural sector.
Chicago wheat futures rose for a fourth straight session on Tuesday, supported by brisk U.S. export demand and a hike in Russia's export duty. As of 0336 GMT, the most active wheat contract on the Chicago Board of Trade climbed 0.29% to $5.27 per bushel. Competitive pricing from U.S. suppliers and delays in shipments from the Black Sea have prompted Asian flour millers to ramp up imports of U.S. wheat in recent weeks, according to grain traders.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.